What is up, YouTube? If you're like most people, you probably think of money as something that's physical and tangible, like a dollar bill or a coin that's controlled by a government. Well, it might not have to always be that way. Picture a world where money is not controlled by the government, but instead it's decentralized, meaning no one has individual control of the entire currency, only the people that own it. The second point is that it's very transparent. Every transaction is recorded and stored on a database called the blockchain. This means anyone can view a Bitcoin's user's transaction history. Weird, I know, but don't worry. The owner's personal information is not revealed unless they voluntarily choose to do so. Now, the transparency can be good, but it also has its drawbacks, such as exposing the financial activity of its user. Now, what is the blockchain? In simple terms, think of the blockchain as a digital notebook that stores its records across thousands and thousands of computers all over the internet. Once a transaction has taken place and has been verified, then it's added to the blockchain. What is Bitcoin? Bitcoin is a digital currency, a payment system that allows people to send money without the need for a middleman. It's decentralized, meaning not controlled by a government or an individual like the fiat currency we currently use today. It was created in 2009 by an anonymous person or group of people. No one actually knows who created it, although the fictitious name is someone that goes by Satoshi Nakamoto. Bitcoin has a fixed supply of 21 million Bitcoins. This means that once all Bitcoins have been mined, no more can be issued. Mining is the process of adding new transactions to the blockchain. It requires complex mathematical equations to successfully mine Bitcoin. If successful, a miner will then be rewarded with new Bitcoins. It's extremely difficult to do. Now, because the blockchain is decentralized and transparent, it eliminates the need of the traditional financial institution and intermediaries such as banks. In traditional financial systems, banks play critical roles in verifying different transactions while also keeping records using double entry bookkeeping systems. However, we know the blockchain ignores the need for traditional banking system. Because of this, it ensures transparency throughout its digital network. Another benefit of Bitcoin is to make transactions faster and more cost effective. In short, there's no need for transaction fees. For example, if you need to wire some money, you'll usually need to go into a bank to do this, depending on the account you have, and the entire process can take some time, and it could cost you some fees. Now, because of Bitcoin's so-called efficiency, this is especially good for businesses that deal with business overseas because the costs of sending money can be very high. Another advantage due to its fixed supply of 21 million Bitcoin is that it's not easily affected by inflation. Basically, you can't devalue Bitcoin like you can with regular currency. What I'm saying is that with fiat currency, you can just print and print and print money and watch it lose its value over time. This is actually a really good thing about Bitcoin and what separates it from our regular currency that we use today, because the value will always be there. Additionally, it's transparent, meaning all transactions are made available to the public. And finally, it's considered to be secure. Not sure how I feel about this. Nothing is completely immune to attack. I'm no professional, but some features that make it relatively secure is its cryptography, advanced technology, make it very difficult for people to cheat the system and alter the blockchain. Other security measures allow you to store your Bitcoin in a digital wallet, which you then can protect with a password or two. However, it's important to note that you still can get hacked and have your Bitcoin stolen. And I don't think it's FDIC insured. Investing in Bitcoin. Now, the value of Bitcoin has increased like crazy. In March of 2010, it was worth less than a penny. By July of 2011, it was already at $31, which is an insane amount of profit in just a short amount of time. Ever since Bitcoin's inception, it's had a pattern of going up and down. It's currently trading around 30K right now. So to buy Bitcoin, the largest companies that allow you to do this is US-based company Coinbase. You will need to set up an account to do this. You'll probably have to submit some documentation, and then you can use a debit card or an ACH transfer from your bank to fund your account. All you have to do is then hit buy. Some other platforms include Gemini and Binance. Don't really use those. Anyways, guys, don't put all your eggs in one basket. And if my opinion matters to you, or you just personally want to hear it, I would not buy any at this price. Future of Bitcoin is still very uncertain, so I'm not fully in. However, I do like its technology. It's forward thinking, which is great. This is needed in the traditional financial system that we currently are in, but I'm still skeptical. I don't see any intrinsic value in it whatsoever. What I mean is it's lacking fundamental qualities like earnings, cash flow, etc. Instead, it derives its value based on what people think about it, which is just market demand and supply. Anyways, guys, thank you for watching. I hope you found this video to be informative. If you did, if you enjoyed it, please subscribe, drop a comment below, and let me know what you think. Anyways, I'll see you guys on the next one.